Hi, you hear a lot about asset allocation these days. You have funds and schemes and so on. But like as in many other things that we at First Global started talking about first, we start talking about global diversification or asset allocation, or for that matter diversification in a portfolio, and very soon everybody copies and it becomes a buzzword. But the issue is that most people copy without really going deep into it or really understanding it. So I see documents for asset allocation schemes that talk about that 85 to 90% of your returns come from asset allocation and not from stock selection, which is something that we first cited. But the issue is this, that the studies that talk about it actually talk about asset allocation as allocating assets in all possible assets. That means all geographies, all asset classes. Whereas in India, most asset allocation schemes just mean that some mix of debt and equity, maybe a little bit of gold, and within equity, value versus growth is considered asset allocation, or some certain categories of industries. But that is not good enough. It is of course better than being in a single asset, but still being in a single geography is not good enough. In your consideration set have to be all asset classes, all geographies, and then it also means that you must tactically and dynamically change that asset allocation, because the same asset class or same geography doesn't do well forever. I mean, there are long periods of time when even well-known or well-regarded markets don't do well. Remember, the Nasdaq peak before the tech crash of 2000 was not taken out for another 15 years. It did not cross that high for another 15 years. That's as long as it took. But when you are looking at your own asset allocation, remember that for any long-term dream that you have, any long-term financial goal that you have, you cannot look at asset allocation only within the constraints of India. Because one, there is a risk. It's putting all your eggs in one basket. And as the Asian crisis of 25 years ago showed, that risk can be very real. For an investor in Taiwan, they lost 50% of their net worth in 1 year. For someone in Indonesia, they lost 90% of their net worth in 1 year. So that is a risk. But besides that kind of outlier risk, the fact is also that when I started working, the dollar was 12 rupees. Now it is 83 plus. So that is 85% depreciation in the rupee in the course of a single career. So talking of retirement money or long-term goals, you can't forget that. So real asset allocation means that you have to look at all asset classes across the globe. And of course, I know it's not easy to find either a fund manager who knows their way around this, and also that if you are not a mega high net worth individual, how do you access this? And that is why in First Global, since this is a personal cause for me, that Indians do not consider the rest of the world in their consideration set when investing, this is something that was so close to that. We have a multi-asset, multi-geography, basically all geographies, all assets product that starts at $10,000, which is just about less than 8.5 lakh rupees. This is something you cannot get for less than $1 million in most financial institutions in the world. So do think about asset allocation, not just within that limits of India, because now the LRS, or the Liberalized Remittance Scheme, allows you to invest significantly overseas as well. So do consider all assets in the world in your consideration set. I hope that helped.